Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Wednesday, September 19, 2012. Well, the change of trend today, and the candle has made a higher high and a higher low. Previous day's trading we had a downtrend in place, a white-bodied candle that tested down to the support at 1755, which is a very important level moving forward for this market. And today, the change of trend with the buyers strong enough to take out the previous high to change the trend to the upside. Having said that, however, we have rallied in this trend on a spinning top candle and a candle of indecision, and it does raise doubt about continuation of this trend to the upside. We have a small body on this candle, which denotes in this case the sellers making a very small amount of net bearish progress, as opposed to the buyers for the previous day's trading. So even though the trend has changed, the buyers have lost momentum with that regard. But also we see the strong price rejection from above the 1780 level, and the market has tested to that level on the previous four trading days and has been rejected quite strongly from that area. So it does raise doubt about continuation of this trend to the upside. If we look at the area above this 1770 level, we have had strong rejection in this zone extending up to 1780. So moving forward, it is a crucial area to this market, and it's unlikely that this market will rally to the round number 1800 resistance unless we have a solid bullish close up above this 1780 level. By the same token, when we've had this strong rejection from the 1780 level, we also had rejection from below the 1767 level, and that is an important level for today's trading, and then below there the 1755 level, as I've already mentioned. So for today's trading, a very, very indecisive candle. In terms of the Fibonacci extension, and we're examining the relationship of the first time frame uptrend that the market's now in to the previous time that the market was trending up, and here we haven't seen the market interact with any major areas yet. The market is close to the 23.6% level and may interact with that with tomorrow's trading, and if we see some price rejection from there, there is a possibility the trend could change back to the downside. But we do have other areas above there which are slightly more important: the 38.2%, 50 and 61.8% at 1804, which is the 38.2%, coincides with this 1800 round number level of resistance. So that will be a very strong level of resistance if the market can rally up to that zone. In terms of the Fibonacci retracement, we're examining the relationship of the current first time frame uptrend to the prior time the market was trending down, and here we've seen the market be rejected from the 100% level, so that could be significant and it may set the market up for a change of trend. If we do rally through here, we have the 161.8% level at 1797, coincides again with around that 1800 number and strengthens the resistance expected at 1800 if the market does rally. But in terms of Ichimoku, we have a very bullish market in all three time frames. The market's trading above the cloud, so we have a bullish market in the long-term time frame, bullish in the medium-term time frame by trading above the Kijun-sen, the pink line, and bullish in the short-term time frame by trading above the Tenkan-sen. And the Chikou span is above the corresponding price action, so it's confirming all of this bullishness that we're seeing. So overall, a bullish market, a market that has attempted to retrace back towards the flat Kijun-sen. That Kijun-sen is now starting to kick up a little bit, so it does suggest that the buyers are attempting to take control of this market once again, however on an indecisive candle. But significantly, if we look at this prior downtrend, the sellers in their attempts to retrace back towards the equilibrium as described by the Ichimoku indicators in all three time frames hasn't been strong enough to make any inroads into this very strong first time frame uptrend that we saw the market in prior to this congestion that we're seeing, and it does suggest that the market is destined for higher levels. Obviously the 1767 level is the area we want to watch. 1755 is probably a bit more important as support, and then the area around the Tenkan-sen at the moment trading at 1735, but if the market continues trading as it is, it will extend up to the 1750 level. But then we have this very solid support in this area highlighted in yellow down below. As I've mentioned, not a lot of resistance above 1780, and if we can have a solid bullish close up above there, we could test to 1800. And I suggest that with the confluence of the Fibonacci ratios around there and the round number, then that will be very, very strong resistance for this market.